program is brought to you by Real Estimate, Australia's #1 property value estimate. Get your real estimate today on realestate.com.au.
Welcome back. National property prices jumped 5.5% last year, with prices in capital cities lifting about 6.4%. Data from REA Group also shows that rental vacancy rates increased slightly in December, rising to 1.12%, but that's still incredibly low. Joining me now on set is Angus Moore, economist at REA Group. Angus, thanks for your time. Let's just start with the property market and auctions. Obviously, it's a pretty quiet time of year right now, isn't it?
Yeah, we don't see a lot of activity in the kind of start of January, and that's kind of a hangover of December. You know, we see pretty quiet conditions in December. There's not a lot of new properties being listed, and the reason for that's the end of year break. You know, people go away over Christmas, New Year's. People are on holidays. You know, it's not a particularly attractive time for sellers to be kind of looking to list and looking to sell, and so we just don't see a lot of activity across the early part of January. That will start to change as we get later into January, particularly after Australia Day into February. We do start to see some people listing homes from sort of the second week of January, and that'll start to ramp up. And then that'll translate into auction activity, you know, later into January and into February.
Yeah, so mid-Feb, by March, things are going to be sort of back in full swing.
Yeah, certainly, you know, by the time we get to March, into the kind of peak of the autumn selling season, you know, that is a busy period in property markets right the way up to Easter. You know, activity is very, very busy. Then once we hit Easter, things will quiet off again for the usually quieter winter period.
Now, in the intro, we talked about, I mentioned rents and how rental vacancy rates in December, they increased slightly to 1.12%, but that's still very low. So what have we got in store for renters this year in 2024?
Yeah, look, 2023 wasn't another great year for renters. You know, we've had some pretty challenging years since the pandemic, really, and 2023 continued that. Rental vacancy rates remain extremely low. They were up a little in December, but I would stress a little. And, you know, sitting around 1% across pretty much all parts of the country is just incredibly low. What that's translating to is very quick growth in rents at the moment.
There's a chart showing that rental vacancy rate. I guess you can sort of see capital cities a little bit better than regional areas.
That's right. You know, we've actually seen that kind of throughout the pandemic. Regional areas had incredibly low vacancy rates from basically mid-2020, and you know, we haven't seen that change since. Capital cities are a little higher, though, again, I would stress a little. You know, they've been, for much of 2023, kind of trading places, that regional areas and capital cities, that they've just both been incredibly tight. You know, we're seeing that particularly in some of the smaller capitals. You know, Adelaide and Perth have been sub 1% rental vacancy rates for much of 2023, which is just wildly tight.
And then the other part of this as well is, while vacancy rates are low, advertised rents continue in some places to continue rising. So I think we've got a chart which we can show median rents, but you know, what's the future holding for 2024 for rents? Are rents going to eventually start to ease off a bit?
Yeah, so we're certainly seeing those tight rental market conditions translate into quick rent growth. So over 2023, you know, we saw growth in median advertised rents on realestate.com.au across the combined capital cities of 13%. Some cities saw nearly 20%, or Perth did see 20%, which is wild growth over the period of 12 months. You know, we might consider a normal pace for rent growth to be something like the inflation target of 2 to 3%. So 13% is way quicker than that. Now, the maybe silver lining is we actually saw quicker growth in 2022. So things are starting to slow down, perhaps. And so if that trend continues, you know, maybe as we get later into 2024, we might start to see some relief. But in the near term, unfortunately, with rental markets as tight as they are, it's going to be tough.
I guess the big problem is population is still growing strongly. The construction sector is still lagging a bit. It's difficult to build homes and build apartments right now. So the future is probably not great for people looking for a rental property, at least for the next, 6 to 9 months?
Yeah, you know, certainly in the near term, 6 to 9 months, we're probably not going to see much relief for renters. You know, rental vacancy rates very, very low, and you know, it's hard to see that changing on a dime. You know, the way that we build more homes and bring more homes into the rental market is fundamentally building them, and that is hard. And at the moment, we're not building at the sort of pace even that we were pre-pandemic. You know, the construction sector has been very challenging. It has been hard to build homes, and that's kind of leaving us with a bit of a backlog at the moment.
And just quickly, we saw property prices, they lifted 5.5% roughly across the country last year. What's the REA Group expectation for 2024?
Yeah, we were certainly surprised by property price growth last year. You know, we'd kind of gone into the year expecting we'd see modest declines in prices just because of how quickly interest rates had risen and, you know, the kind of affordability challenge that posed. Obviously, that didn't happen.
Yeah.
You know, particularly places like Sydney and Brisbane, turned out to be pretty remarkably robust. This year, we're still expecting that interest rates are going to be a headwind. Affordability is still a real challenge. So that's going to certainly weigh on prices, but we're probably expecting we'll see sort of slow positive growth. So below average, but positive.
Angus Moore from REA Group, thanks so much for your time.
Pleasure. Thanks for having me, Ed.